Hello friends, welcome back to the Crypto Skill. Gold has been the world's most trusted store of value for over 5,000 years. Kings built empires with it, governments backed their currencies with it, and even today, it sits in the vaults of central banks around the world. But then came Bitcoin, a digital asset created in 2009 that some people call digital gold, and in October 2025, Bitcoin hit an all-time high of $126,198, shocking the entire financial world. So here is the question everyone is asking in 2026: if you want to protect your wealth, should you put your money in gold or Bitcoin? In this video, we are going to break down everything: the history, the returns, the risks, and the future, so that by the end, you will know exactly which one deserves a place in your portfolio. Let's get into it. What is gold and why has it always been valuable? Let's start with gold, the oldest store of value in human history. Gold has been used as money and a store of value for over 5,000 years. Ancient Egyptians used it, the Roman Empire used it, and even today in 2026, gold remains one of the most sought-after assets on the planet. But why is gold so valuable? There are several key reasons. First, scarcity. Gold is rare. All the gold ever mined in human history would only fill about 3.5 Olympic-sized swimming pools. There is a limited supply on Earth, and mining new gold is expensive and slow. Second, physical durability. Gold does not rust, corrode, or decay. A gold coin from 2,000 years ago still holds value today. This makes it a perfect long-term store of value. Third, universal acceptance. No matter where you are in the world, Japan, Nigeria, Brazil, or Canada, gold is recognized and accepted as valuable. It is the one asset with truly global trust. Fourth, hedge against inflation. When governments print too much money and inflation rises, the value of paper currency falls, but gold tends to hold its value or even increase during inflationary periods. As of May 2026, the price of gold is around $4,583 per ounce, having hit an all-time high of $5,405 per ounce in January 2026. This massive rise was driven by global inflation, geopolitical tensions, and record buying from central banks around the world. Gold is not just an investment, it is a 5,000-year-old financial institution. What is Bitcoin and why is it called digital gold? Now let's talk about Bitcoin, the new challenger. Bitcoin was created in 2009 by an anonymous person or group known as Satoshi Nakamoto. It was designed as a decentralized digital currency, meaning no government, no central bank, and no single person controls it. But over the years, Bitcoin has evolved beyond just a currency. It has become something much more powerful, a digital store of value, and that is why many people call it digital gold. So, what makes Bitcoin similar to gold? First, scarcity. Just like gold, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins in existence, ever. This is written into the code and cannot be changed. As of 2026, over 19.8 million Bitcoins have already been mined, meaning less than 1.2 million are left to be created. Second, resistance to inflation. Because the supply is fixed, Bitcoin cannot be inflated by governments or central banks the way paper money can. This is why many investors see it as a hedge against inflation, just like gold. Third, decentralization. No government can seize, freeze, or control your Bitcoin if it is stored in your own wallet. This gives it a level of financial freedom that gold and certainly bank accounts cannot match. Fourth, institutional acceptance. In 2024, Bitcoin ETFs were approved in the USA. By 2026, institutional giants like BlackRock and Fidelity have brought billions of dollars into Bitcoin. It is no longer a fringe asset. It is a mainstream financial instrument. As of May 4, 2026, Bitcoin is trading at around $79,000. Update this with the latest price when you record after touching its all-time high of $126,198 in October 2025. Key differences between Bitcoin and gold. Now let's compare Bitcoin and gold directly across the most important categories. Difference 1. Supply. Gold. New gold is mined every year. While the supply is limited, it is not perfectly fixed. About 3,300 tons of gold are mined each year, slowly increasing the total supply. Bitcoin. Exactly 21 million, not one more, ever. The supply is mathematically guaranteed and cannot be changed by anyone. Winner. Bitcoin for having a harder and more predictable supply limit. Difference 2. Portability. Gold. Try moving $1 million worth of gold from one country to another. It is heavy, expensive to transport, and requires serious security. Bitcoin. $1 million worth of Bitcoin can be sent anywhere in the world in minutes with just a phone and an internet connection. No borders, no delays, no middlemen. Winner. Bitcoin by a massive margin. Difference 3. Storage and security. Gold. Physical gold must be stored somewhere safe. A vault, a safe, or a bank. This costs money and carries physical risks like theft. Bitcoin. Bitcoin is stored in a digital wallet. A hardware wallet the size of a USB drive can hold billions of dollars in Bitcoin, but if you lose your private keys or seed phrase, it is gone forever. Winner. TIE. Both have unique storage challenges. Difference 4. Volatility. Gold. Gold is relatively stable. In 2026, it hit an all-time high of $5,405 in January and has traded between $4,500 and $5,400, that is volatile by traditional standards. But nothing compared to crypto. Bitcoin. Bitcoin went from $126,198 in October 2025 down to around $76,000 in early 2026, a drop of almost 40% in just a few months. This kind of volatility is normal for Bitcoin. Winner. Gold for stability. Difference 5. Track record. Gold. 5,000 years of proven value. No other asset in history comes close. Bitcoin. Only 16 years old. While its performance has been extraordinary, it has not been tested through multiple generations and economic cycles the way gold has. Winner. Gold for historical trust and longevity. Returns comparison. Which made more money? Now let's look at the numbers, because this is where things get very interesting. 10-year returns, 2016 to 2026. Gold. In January 2016, gold was trading at around $1,060 per ounce. As of May 2026, it is trading at around $4,583 per ounce. That is a gain of approximately 330% over 10 years, very solid for a traditional asset. Bitcoin. In January 2016, Bitcoin was trading at around $430. In October 2025, it hit its all-time high of $126,198, even at today's price of around $79,000. That is a gain of over 18,000% over the same period. Let's put that in real money. $1,000 invested in gold in 2016, approximately $4,300 in 2026. $1,000 invested in Bitcoin in 2016, approximately $183,000 plus at peak, and still around $183,000 even at today's price. The difference is staggering. Bitcoin has absolutely dominated gold in terms of raw returns over the last decade. However, and this is extremely important, Bitcoin's journey was not a smooth ride. Along the way, Bitcoin dropped 84% in 2018, dropped 77% in 2022, and has seen multiple other major crashes. Only the investors who held through all of that are sitting on those extraordinary gains. Gold, on the other hand, rose steadily. No sudden 80% crashes, no overnight panic, just slow, reliable appreciation. Risks of each asset. Every investment has risks. Let's look at the risks of both honestly. Risks of gold. Price manipulation risk. Gold prices are set by a handful of major banks and institutions in what is called the paper gold market. There have been documented cases of price manipulation in the gold market over the years. Storage risk. Physical gold can be stolen, and if stored in a bank or vault, you are trusting a third party with your wealth. Low returns in bull markets. When the economy is doing well and stock markets are rising, gold often underperforms. It is a defensive asset. It shines most during uncertainty. Confiscation risk. In 1933, the U.S. government actually ordered citizens to hand over their gold under Executive Order 6102, while unlikely today, governments technically have the power to restrict gold ownership. Risks of Bitcoin. Extreme volatility. We already mentioned this, but it is worth repeating. Bitcoin can drop 40%, 50%, or even 80% in a bear market. This is not for the faint-hearted. Regulatory risk. In 2026, regulations are improving, but governments could still introduce restrictions that affect Bitcoin's price and accessibility. Technology risk. Software bugs, exchange hacks, and protocol vulnerabilities are real risks in the crypto world. Key loss risk. If you lose your private keys or seed phrase, your Bitcoin is gone forever. There is no customer service to call, no recovery option. Scam risk. The crypto space is still full of scams, fake projects, and fraudulent exchanges. Who should choose gold? Gold is the right choice for conservative investors who want a safe, proven store of value with thousands of years of history behind it, investors close to retirement who cannot afford the volatility of Bitcoin and need stable, reliable wealth preservation, people in unstable economies where local currencies are collapsing. Gold has always been a trusted refuge in such situations. Portfolio diversifiers who want something that moves independently of stocks and bonds. Investors worried about geopolitics. In 2026, with ongoing global tensions, gold reached an all-time high of $5,405 in January 2026, proving once again that it is the world's ultimate safe haven during times of fear and uncertainty. If you want to protect your wealth and sleep well at night, gold is your answer. Who should choose Bitcoin? Bitcoin is the right choice for young investors who have time on their side and can ride out the volatility for years, high-risk, high-reward seekers who are comfortable with extreme price swings and are looking for life-changing returns, believers in decentralization who want to hold wealth outside the control of any government or bank, tech-forward investors who understand blockchain technology and believe in its long-term potential, inflation hedgers who want a mathematically guaranteed limited supply that no government can touch. And here is a key point for 2026: with Bitcoin ETFs now available through mainstream brokers in the USA, you no longer need to manage wallets or private keys. You can simply buy Bitcoin exposure through your regular brokerage account, just like buying a stock. This has opened the door for millions of new investors. The smart strategy: why not both? Here is what the smartest investors in 2026 are doing. They are not choosing one or the other, they are holding both. Gold and Bitcoin actually complement each other very well. Gold provides stability. It has 5,000 years of history. It is globally recognized, and it holds value during crises. Bitcoin provides growth potential with its fixed supply, institutional adoption, and technological innovation. It offers the possibility of extraordinary long-term returns. Together, they create a powerful store of value strategy. Here is a simple example: conservative portfolio, 15% gold, 5% Bitcoin, 80% stocks and bonds. Balanced portfolio, 10% gold, 15% Bitcoin, 75% stocks and other assets. Aggressive portfolio, 5% gold, 30% Bitcoin, 65% stocks and other assets. The exact percentages depend on your age, risk tolerance, and financial goals, but the key takeaway is this: in 2026, both gold and Bitcoin have earned their place in a well-diversified portfolio. Conclusion: so Bitcoin versus gold, which is the better store of value in 2026? Here is the honest answer: gold is the better store of value for stability, safety, and long-term wealth preservation. With 5,000 years of history and a current price of around $4,583 per ounce, it has proven its worth time and time again. Bitcoin is the better store of value for growth potential and inflation resistance. With its fixed supply of 21 million coins, institutional backing from BlackRock and Fidelity, and an all-time high of $126,198 in October 2025, it has proven that it is a serious financial asset. The smartest move in 2026: hold both, diversify, and always think long-term. If this video helped you, please hit the like button and subscribe to the Crypto Skill for more videos like this. Drop a comment below. Are you team gold, team Bitcoin, or both? See you in the next video.